Welcome back to the Stock Market Option Trading Podcast and YouTube channel. I'm your host, Eric O'Rourke. In this video, we're going to talk through some of the things I'm looking at heading into this week. We had a pretty volatile end to the week last week. We can see this big Friday ugly red candle. But then today, Monday, we're June 16th here, about midday. The market has rallied really hard off the lows and we're starting to fade. So it's still a very volatile market. But let's talk a little bit about some of the economic data that came out last week. And we'll talk about what's happening this week. Last week, we had core CPI and core PPI, both measures of inflation that the Fed watches, and they continue to come in weaker than expected, which means inflation is coming down. That is good news for those that are in the rate cut camp for the Fed, because we know once the Fed decides to cut rates, that's going to be kind of a boost to the market or a tailwind. We also had consumer sentiment come in much higher than expected, which is also good for the economy. So we have two things happening that ultimately left us in a good position in terms of monetary policy, if you're looking forward to that. This week, today is Monday the 16th, we have core retail sales tomorrow, but we have big FOMC meeting on Wednesday with a press conference on Wednesday afternoon. So I think this is going to be a pretty big deal this time because the economic data has come down. The Fed's not going to have a lot of reasons to stay as hawkish as they've been over the last couple months. Tariff discussions continue to be kind of all over the place, and the Fed is kind of taking a wait and see approach. But if you're just looking at inflation and jobs numbers, the Fed could consider doing more than 2 rate cuts. I think that's what they're slated for this year. Maybe they could do one sooner. I don't know. So Wednesday is going to be pretty big. I think the market is going to kind of maybe tread water. Until then, we're kind of seeing that today. We get a huge rebound last week from last week's close, and now we're kind of in this, I'll call it the chop zone for now. So now we're going to look at the weekly forecast from AlphaCrunching.com. And what this is going to tell us is what's the typical pattern of the market from Monday's open all the way to Friday's close. And we can see that Monday, Tuesday, up until about Wednesday have been relatively bullish. And we're starting to see a little bit of a decline towards the end of week. And this can be attributed to, we had that big sell-off on Friday. And even Thursday of the week before, we had a big sell-off, but we ultimately bounced back the following day. So bulls are the dip buyers are stepping in, whatever you want to call it. We'll see if that continues. But these volatile moves are showing up in the forecast as kind of an end of week weakness. If we compare this to the previous week, we can see the end of week weakness is weaker than the previous week, and the early week strength is actually weaker. So we've seen a little bit of weakness in the forecast. Again, a lot of that's brought on by a couple of relatively bearish days. And we look at our metrics like the directional strength ratio is negative, and our average strength deviation is actually negative as well. And what that is telling us is that with the forecast ending down here only up a measly, 13 points or so. This is much lower than the previous week, so that and it's going to be lower than the 3-week average. So there's definitely weakness being seen. Although we're starting to push to new highs, it's not a nice low volatility uptrend. We're seeing a lot of volatility. We have the VIX down 7% today, but it was up, I think, 9 or 10% on Friday. So as we're looking at the daily chart, and we can zoom out a little bit, the uptrend is still intact. I know the forecast is showing weakness, but the uptrend is still intact. Our moving averages are still in order, if you will, from a bullish perspective. We have the 5 SMA above the 10 and the 10 above the 20, and they're all kind of in line. Again, we're seeing some immediate dips and then immediate bounce backs. So here we had a dip, but look at that long candle on the daily chart. This was May 30th. And we had volatility on Friday because Israel's attacked Iran and they're going back and forth. But I'll be honest with you, I really don't know why we recovered this hard. I think I looked at the futures market last night on Sunday and they opened up. I think S&P was down 90 points, and I woke up this morning and the futures were green, and we were actually pushing the recent high here. So it is all over the place, very, very volatile. Let's talk about a couple of these trades that I'm in. These are AlphaCrunching trades that come off the Trade Ideas tab. Let me quickly show you that for this week. Each week we put up back-tested trade ideas for each day of the week and certain times based on a combination of AlphaCrunching data as well as the moving averages. So right now, the moving averages are still bullish, and our triumph rates from AlphaCrunching continue to favor the long side. So you're going to see more and more long-based trades. We do have some hedge trades in here as well. But today for Monday, we're looking to add there's a few trades here. I'm mainly sticking to the PCS trades, the put credit spread trades. We have a 7-day put credit spread and a 1-day put credit spread that looks like it's going to trigger this afternoon. And if we look at the chart here, I've notated some of the trades I'm still in. This trade, June 16th, that's today. This one expires today. We put this on last week. This is one of the AlphaCrunching trades from last week. We sold the 60-15 put and bought the 60-10 put for protection. We got a credit of $2.15. We were able to buy that spread back today for 45 cents. And honestly, I feel really, really lucky because with the market selling off last week, I thought for sure that these two spreads were going to basically not work out. But we do have this credit spread, call credit spread hedge up here. So we were able to get out of this one with a profit. And we're going to be adding some new ones today, but we're still going to keep this hedge for now, even though the hedge expires in a couple days. So we're just continuing to layer in spreads, mostly to the long side. We do add some hedge trades to kind of offset, if we do get a surprise, pullback, which anything can happen this week between tariffs, Israel and Iran, and FOMC. I mean, you either want risk or you don't. So we're taking these mechanical based trades and keeping our risk in check, and that's kind of how we're going in this market, because if you just read the headlines, you're bound to be confused and not really know what to expect over the next few days. Now lastly, let me just throw on the spot gamma call and put wall and some of their levels and what we're seeing. The call wall is still up here at 6,100 for now. This is where it's been. We haven't gotten to 6,100. We first have to get back above 60.50. And right now we're really just seeing SPX in the middle of all of this, right? In the middle of the range. There's a little bit more option interest below current price. The vol trigger is an important level. That's around SPX 6,000. Bulls are going to want to stay above this if we want to make a new leg higher, obviously. But if you get below here, then volatility can actually start to pick up a little bit. So right now, the bull uptrend is still intact. 6,000 is probably your biggest support level you want to watch. But we do have interest here at 59.50 with the put wall down at 5,900. So we are quote unquote range bound between 59 and 6,100 for now. And again, the risk of some downside is prevalent. And even, just a pullback to the 20-day moving average is going to get you down to 59.50. But that's going to be below this vol trigger. And that's where, it could get uglier. I don't know, exactly what the Fed is going to say. However, we need to be prepared. And it's also good to be aware of some of these major levels here. So that's all I got for today. Thanks for watching. Thanks for listening. And we'll see you in the next episode.